So ever since springtime of 2022, and when the economic data was clearly decelerating and the Fed was
Mm.
clearly intent on causing that deceleration, I basically made the point that you want to be in cash, you want to be in gold, you want to be in defensive. I do think that going forward, some of these cyclical um, things are getting interesting. So, for example, I've been banging the table a little bit on banks. I think banks are somewhat oversold here. I also
Okay.
do think that Bitcoin is kind of in a deep value zone after so much capitulation. So I'm a lot more constructive on some of these, more volatile type of investments. It doesn't necessarily mean that I think the bottom's 100% in,
Right.
but I think that it's either in or that we're at least in the later stages of these types of drawdowns for those types of assets.
After 7 interest rate hikes, 4 of which were consecutive jumbo hikes, the United States economy is well on its way to a significant economic slowdown in 2023. Most experts and analysts, including those who had previously predicted a soft landing, now agree that the economy is either already in recession or heading for one. Most market experts also agree that this recession will be different from previous ones in the sense that the Federal Reserve might not be readily available to come to the market's rescue. In addition to the often repeated 2% target for inflation, it is quite clear that Fed Chair Jerome Powell has built his whole brand around bringing inflation down regardless of the pain it would cause to Americans. With such unsavory economic and market conditions to look forward to, investors must suitably adjust their investment portfolios to ensure they are well positioned for whatever we are about to face. In a recent interview, popular macro analyst Lyn Alden discusses her ideal investment strategy for navigating a recession, especially considering the events of the past year. Alden, who is a known Bitcoin supporter and investor, explains that the leading crypto asset is in a deep value zone. Rather than avoid traditionally volatile assets like Bitcoin, Alden's strategy in 2023 is to embrace them. We will now take you to Lyn Alden's interview as she discusses the economic indicators of the coming economic decline, her investment strategy, and issues that may delay further Bitcoin adoption. Please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss our regular uploads. Also, ensure you drop your comments below, as it helps with the YouTube algorithm so our videos can reach more people. Thanks and enjoy the video.
I'm looking at a lot as like the post-dot-com recession, right? That was one where it was a
Okay.
major impact for markets and a smaller impact for the economy. But obviously, it's going to depend on how policymakers handle that. One thing I think is that a lot of people they fight the last war, right? So they look back, for example, at the 2008 recession, and now they start to fear that every recession is going to be like one of those. One big difference that I point out about this setup compared to that setup is that going into 2008, banks were the weakest they've ever been in terms of they had the smallest allocation they ever had as a percentage of their assets to risk-free assets like treasuries or bank reserves, and they had maximum exposure to loans, to riskier securities, and they had very loose lending standards, which means a pretty small rate of default could render them insolvent. Whereas now, because they're much more highly allocated to those safer assets, it takes a bigger problem to cause them to be outright insolvent. And so,
Oh.
although recessions will impact banks, basically, for example, you'll incur loan losses if you do have a recession. I don't think the problem is going to emanate from the banks, right? They're not the epicenter of the crisis in the way that
Mm,
they were in 2008, and instead, I
exactly.
think it kind of and that's how you get that explosive type of thing. When you have the banking system implode, that's more explosive. Whereas when you have it occur at the periphery, right? So first it's housing, right? Because the
Mm,
interest rates moved, housing activity slowed down. Also, auto loans have slowed down. The tech field, right? You have all these high valuation equities when cost of capital is free. Now that there is a cost of capital, those equity valuations have come down, which forces them to be more profitable, which slows their growth, which means you lay people off because some of that was just malinvestment. It was basically unrealistic expectations. So that gets slowed down, and of course this keeps rippling through more and more and more sectors because of course those people that lost their tech jobs are going to now buy fewer other things. The people that are not building houses are going to buy fewer other things, and so this is like the type of recession I think emanates from the periphery and then moves in, rather than say the 2008 crisis that started from the center
right.
and then exploded outward from there. So often what I do is rebalance based on conditions. So ever since springtime of 2022, and when the economic data was clearly decelerating and the Fed was
Mm,
clearly intent on causing that deceleration, I basically made the point that you want to be in cash, you want to be in gold, you want to be in defensive value stocks, things like healthcare, things like energy
right.
pipelines, things like that. That was kind of like my core position. That type of investment has outperformed, whereas, for example, more cyclical things like Bitcoin have underperformed. A lot of leverage is wiped out. I do think that going forward, some of these cyclical um, things are getting interesting. So, for example, I've been banging the table a little bit on banks. I think banks are somewhat oversold here. I also
Okay.
do think that Bitcoin is kind of in a deep value zone after so much capitulation. So I'm a lot more constructive on some of these, more volatile type of investments. It doesn't necessarily mean that I think the bottom's 100% in,
Right.
but I think that it's either in or that we're at least in the later stages of these types of drawdowns for those types of assets. Whereas I'm still quite concerned about, for example, the Teslas and the Apples of the world. I do think that they could have poor, say, 5-year returns
Mhm.
compared to, say, something like bank equities or something like Bitcoin that I expect to do better. So overall, I have been emphasizing that mix. Basically, on one hand, you have the
Right.
conservative cash flow producing assets, and then I do take certain risks in emerging markets or Bitcoin that are historically more volatile, and I'm essentially staying with that position and just leading into things that I think have maybe already had a lot of their downside done. And touching on Grayscale, so that particular portfolio is at a particular brokerage account, whereas, for example, I do recommend that for people that buy Bitcoin, you should try to self custody it, right? So a
Right.
broker holding something in like a GBTC or a MicroStrategy is if you have a brokerage, sometimes those are your only options. I do
Mhm.
think we should have a spot ETF in the United States, but whenever possible, people should try to self custody and own their own Bitcoin, which of course I do as well.
With the recent rallies in the cryptocurrency market, investors are pumped that a new bull market has begun or is just about to begin. However, some top analysts and investors are still doubtful that a new bull market can begin given the current economic condition. For one, if there is a full-blown recession in the United States, it is expected that it will negatively impact the stock market, to which Bitcoin has shown some correlation. On the other hand, macro analysts like Lyn Alden and Raoul Pal believe Bitcoin and by extension, the rest of the crypto market is more correlated with global liquidity than the stock market. Others have also argued that if recession hits, investors will pull money from the stock market toward other asset classes like Bitcoin. Please let us know how you think Bitcoin will perform if the US economy does slip into a recession, while we bring you Lyn Alden's observation on issues impacting Bitcoin adoption.
So I think it depends on what part of the ecosystem you look at, right? So a lot of people focus on, for example, Bitcoin Twitter, which they might
Right.
they might mistakenly assume that's all of Bitcoin, whereas of course
Hmm.
that's the more vocal public group. Whereas if you look at the developers, a lot of them they don't have time for Twitter. They're only
Right.
marginally on Twitter in many cases, and a lot of times they have very different views from the rest of the space. So I think there are pockets of Bitcoin where if you're an intellectually honest person, I mean, you can fit in many different places. I think it's a very
Hmm.
inclusive space in that sense. Um, I think the way I would phrase the parts that seem rough around the edges is that on average the community is like very open and aggressive about calling out things that they perceive as scams. And I think that
Yeah.
unfortunately this ecosystem's been kind of ripe for scams because the way I phrased it before is that by allowing peer-to-peer money, the same technology that allows for peer-to-peer money also accelerates peer-to-peer scams, right? So,
Sure.
for example, before, if you wanted to scam people, it was like direct mail, things like that. If you wanted to go through investment opportunities, generally that the SEC would be some degree of a barrier. If you want to get someone into penny stocks or things like that, you're still going through the SEC in some way. Whereas this technology is allowed for security basically to be sold to the public in a way that goes around a lot of those other uh, historic safeguards. And I think there's a lot of active debate. I mean, whether those safeguards were ever really effective.
Hmm.
But because this technology kind of, at least temporarily, in this kind of arbitrage, like regulatory gray zone at the moment, because they kind of go around those, it's sort of a haven for scammers. Even though, of
Yeah.
course, there are plenty of people that are doing plenty of interesting things in encryption. There are a lot of serious people in the space, but because it's such a haven, there's so much affinity scamming. There's so much pump and dump schemes and things like that. And so I actually think you, I do think it's good to pay attention to a lot of the people that might seem closed-minded because a lot of those have been through multiple cycles and have seen a lot of these before.
Sure.
So
Yeah.
I do think you have to balance a little bit, but I do think that it's a reasonable heuristic to have a very, very high bar in this space before you'd consider something investable. And I
Totally.
think yeah, you want to be you want to be open-minded, but you also want to be very, very on the lookout for scams and kind of start with the assumption that most of the thousands of things out there, unfortunately, are scams.
What are your thoughts on Lyn Alden's assessment of the U.S. economy and Bitcoin's performance in 2023? Please drop your comments and observations in the comments section below. Also, be sure you subscribe to the channel, give this video a thumbs up, and check out our other videos featuring interviews and tweets from some of the industry's brightest minds. Thanks for watching.